The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, folks. This is Jacob Shoup filling in for Tommy O'Brien. Well, let's take a look at what we got going on today. We have, obviously, today, the Fed coming out with a statement, and then we'll have a meeting at 2:30 that will be streamed here live as well on our YouTube and in the den. What are we looking for? Well, bonds have had their worst month in a long time. Well, we're at the 10-year. I mean, we can just watch the chart down here, right? So we're 107 right now. Regardless, what has been acting like is these people or these instruments want, lower price and higher yield, and that's kind of indicative of what's going to happen with the rest, or what at least traders are thinking about with the rest of the market and the economy as a whole, and that means we're going to have rates higher for longer. I do not believe we're going to have a dovish statement today. I think it will be hawkish. I think rates will be held. There was some conversation maybe a month ago from some of the Fed that we might need one more rate hike. Remains to be seen, what happens. I don't know if that will be the case, but you got to think about it, right? It's like, why lower rates at this point? You still have sticky inflation. The job market is extremely strong. You have wages going up. If they lower rates at all, I mean, this can become essentially like a runaway problem. The other thing is, even let's say inflation is coming down at some extent, we're not going to go back to super low rates like we had. The market still is pretty liquid, and there's not really a reason to lower rates so low. And again, I think this is just an example of a whole new generation of traders not experiencing an environment that had more than 0% interest on the overnight rates. So anyways, ES Mini right now on the open, before the open, is off about 0.24%. We're slightly down because of some of the semiconductors. Russell sideways. The NQ is off about 0.37%. The Dow Future is off about 0.13%. The gold contract, we're down, trading at $2,307.50. Silver after a pretty rough day yesterday at $26.64, and then copper at $4.52 on the contract. It's very nice that crude oil is down as well at $80.48 on the light Swede futures contract. We actually will have Teddy Kekstat on today. Teddy is the author of the Tiger Forex Report, and I had him on last week, and he was looking at some movement up to the $90 area in light Swede, so I'm curious to see what some of his new data is telling him as well. Steel Dynamics at 130.12. Some actually it looks bad, but it's actually kind of a bullish move here for that stock. The dollar is trading at 106.21, so quite a little bump up there from the 105.90 area we were trading at. Google at 165.53, Meta 429.15 after quite a devastating earnings report, or at least future guidance in the earnings report. Disney at 111 and Apple at 169.96. We can move over to Starbucks here. One moment. All right. So down 12.77%, trading at 77.19. The shares are tumbling. The Chinese and U.S. demand slowdown is kind of something they're dealing with here. So shares of Starbucks fell nearly 14% before the bell after the coffee chain cut its, after the coffee chain cut its annual forecast on persistent weak demand in the U.S. from inflation-weary customers and slower than expected recovery in China. Several quarters of price hikes have forced customers to ditch cafes and restaurants and instead drink coffee at home, hurting the business for chains such as Starbucks. The inability to stop the traffic leakage from the early signs of pullback in November to date and the worsening macro and competitive dynamics in China may suggest prolonged challenges and no evidence of light at the end of the tunnel. That was a senior analyst looking at Starbucks. The company expects full-year comparable sales, both globally and in the U.S., to be in the range of low single-digit decline to flat, compared with the previous range of 4 to 6% growth. It also cut its per share profit growth forecast to between flat and low single digits versus its earlier range of 15 to 20%. This is what the CEO said. Many customers are being more exacting about where and how they choose to spend their money, particularly with stimulus savings mostly totally spent. Starbucks global comparable sales fell 4% for the second quarter, compared with 1.44% rise estimated by analysts. Starbucks forward price to earnings multiple so its PE ratio is 20.88 compared to 21.54 and 20.83 for McDonald's and Restaurant Brands, respectively. Yeah, I mean, it's just expensive coffee, right? I think, too, you have this movement as well, and, you know, I would say it's kind of more prominent in big cities, but also, like, you can see it in St. Pete. Like, you know, Starbucks are obviously popular, but nobody. There's a big push for, like, smaller coffee houses to get all of it. I still know that there are tons of people paying a lot of money for coffee every day, and they're just not choosing Starbucks, right? And I think there's kind of an air to wanting to choose something more local or something that's not a major, you know, chain brand. Obviously, in big cities, Starbucks is very popular, and in more, how do you say, like, you know, like neighborhoods, I guess. What is the word? Suburban areas. Starbucks is popular as well, but they built a new one out in South St. Pete. And, you know, that area is coming up, and there's a lot of money and young people in it, and the thing's empty anytime I've gone in, right? My friend, she goes and gets Starbucks pretty often, so I go with her, and it's always dead in there, which is nuts. And it's a big place as well. It's a big store. So, yeah, Starbucks down 12.79% currently. I think they just have a lot of other competition as well that other people would kind of rather go to. Let's take a look at Walmart. We spoke about, I believe yesterday or Monday, excuse me, it would have been yesterday, how they're closing some of their healthcare areas, right? So like the dental, the vision, and it just wasn't profitable for them. They're still having the pharmacy there, but Walmart then announced that it's actually launching a new store brand called Better Goods. This is going to be like higher quality and more expensive. We can talk about, of course, we're not at the open right now, but we still, you know, have an area down right now, trading at 59.35, just a little bit higher than the low of the day. So Walmart is rolling out a new store label designed to appeal to younger customers who are not brand loyal and want gourmet food and more affordable pricing. I don't know. Dubious to me, but we will talk about that. Folks, stay tuned. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the morning market kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
All right, welcome back, guys. Jacob Shoup filling in for Tommy O'Brien. Before we went to the break, we were talking about Walmart. Okay, they closed some of their health services, so that's going to be like dental and vision. They are continuing to have their pharmacy open. Now they're launching a new store brand called Better Goods. The reason I said I was doubtful of, what did they say? To appeal to younger customers who are not brand loyal and want gourmet foods that are affordably priced. Okay. I feel like I fall in that category in some capacity, but I also think I'm not a very good representation of the average consumer. And I think what they're kind of talking about here, you know, at least in this analysis, is going to be something like, I know they have Sprouts, right, and all these kind of other health food stores. These are relatively expensive, but more like Trader Joe's, right? So Trader Joe's has good food. It's unbelievably cheap in some capacity, right? But I do think there actually is a brand loyalty to Trader Joe's. So it remains to be seen what happens with that. I know of like one young person for sure who shops at Walmart for food. That's about it. Let's talk about this a little bit more. The new line includes upscale products priced at, it was like whatever, pasta priced at $1.97 per package. Plant-based cheeses, less than $4, which is nuts. The rollout comes as more shoppers are shifting to store brands, which tend to cost less than premium brands. This is a quote: "Today's customers expect more from private brands they purchase, affordable, quality products." The senior VP of Walmart there. Items will range from $2 to $15. Most of them will be under the $5 mark. Better goods are already on the shelves. It'll be interesting to see. Yeah, all these things I'm seeing is, less than $5, which is pretty solid. So we'll see how that takes off for them, but that's that might be very nice for Walmart going forward in the next quarter or two to see what how that is doing. All right. Let's talk a little bit about Apple. Obviously, we spoke about them. This is a few weeks ago here, not a few weeks, last week, but Q1 sales fell basically 19%. Huawei's up 70%. I have said I think this is kind of a renaissance not a renaissance, but the Chinese development of national identity in a sense. The Chinese want to buy more and more Chinese products all the time, right? And this is demonstrating that they can develop products that aren't so baseline and can actually develop these more cutting edge things like newer phones, smartphones. Obviously, the cars are a massive one as well. Apple's China smartphone market shares fell 15.7% in the first 3 months of the year, from 19.7% in the first quarter of 2023. And I think that will continue to be a bad problem for them because its market is so massive, right? And I don't think the Chinese are going to want to keep buying Western materials. And I think the more sanctions that we go on, if this conversation between the U.S. government and China doesn't really work out, I think you'll have a major issue. You can see Musk trying to kind of play around that in a sense by cozying up some of the people in the Chinese government in order to sell his products more affordably and kind of skirt anything that they get hit with. But I think as we continue to go on, and if ground isn't made, American products, like Apple and like these other tech products, will actually slowly be kind of phased out or blocked in China in a lot of ways. The Chinese government workers cannot use Apple in a lot of the areas that they work, which is pretty nuts. Okay, we talk about Amazon as well. Excuse me, guys. So 3.86%. So obviously they had earnings. So let's talk a little bit about reported first quarter earnings that topped Wall Street estimates on the top and bottom lines. Sending shares of the retail giant up 2% pre-market trading. We are up 3.85% right now. Powered by strong showing from its cloud computing segment, Amazon continued a wave of big tech results that have mostly wowed Wall Street, even as investors turn their focus to the conclusion of Fed's May policy meeting on Wednesday. The cloud's not going anywhere, though, so it's kind of safe in a sense, right? Because this is the new standard of doing business. Net sales rose 13% from the same period last year to $143.3 billion. Amazon reported late Tuesday, topping analyst expectations of $142.6 billion. That was per Bloomberg data. The beat was driven by a 16% jump in Amazon Web Services revenue. Wow. Which Amazon said is on course to generate $100 billion annually. The company reported adjusting earnings per share of 98 cents versus the 83 cents consensus estimate. Like its competitors, Microsoft and Alphabet, Amazon is wielding its heft in its cloud computing business to gain an edge in the nascent AI market. AI tools require huge amounts of data and processing power to train and run large language models and their applications, relying on cloud providers to supply vital infrastructure. It was just kind of like a little side note here. I was watching something with Sam Altman, right? Yeah, Sam Altman, the OpenAI guy. And this lady was asking him, what should people, with the introduction of these LLMs and potentially any kind of, real general intelligence, what should the youth be studying and learning? And the dude was they should learn how to be honest and be good people. And it's oh man, this isn't going to be good. All right, let's keep talking here. Amazon CFO Brian Olszewski said on a call with reporters following the report that overall capital expenditures are expected to be meaningfully increased this year from nearly $50 billion in 2023, driven by higher infrastructure costs to support growth in AWS. Amazon is seeing strong demand on the AWS side, with customers signing up for longer deals with bigger commitments, many with generative AI components. Advertising was another strong contributor in Q1 revenue growth. The company matched analyst expectations of $11.8 billion, up 24% from the same period last year. Even as Amazon dazzled with growth across its business, its outlook flashed some signs of potential pullback in consumer spending. This is Olzowski again. What we were seeing is a bit of a continuation of what we said in prior quarters. Customers in the U.S. are being very thoughtful about their spending. They look for deals and they trade down, and that trend seems to be continuing in Q2. Amazon projected Q2 net sales to come in between $144 billion and $149 billion, which is slightly lower than analyst estimates of $150.2 billion. Good deal. Folks, stay tuned. We'll be right back.
Tigers, the inaugural session of Live Trading Fridays with Larry Pesavento was a massive success. Trades were communicated, questions were answered, and money was made. Every second and fourth Friday of the month, from 9 a.m. to noon Eastern Time, Larry wants you to join him as he places live trades and takes your questions. That's right, with this monthly subscription, you receive access to 2 live trading events. We are gearing up for the next session Friday, April 26, so there's still time to sign up. For this month only, use code LarryLive at checkout in order to secure $50 off your monthly subscription price for as long as you subscribe to the service. We'll see you next Friday, April 26, Tigers. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Jacob Shoup filling in for Tommy O'Brien. We will have Teddy Keckstack on the next break, I believe. We are at Market Open right now. Let's take a look. E-mini sideways right now, off about 0.17%. The Russell truly sideways, down about 0.01%. NQ's off about 0.38%. Dow Futures sideways as well. Gold contract up a little bit right now, up 0.44% at 2,312. Silver at 26.72. Copper contract down slightly, $4.53 on that contract. And then crude oil continues to move down. We're at the 80.59 level, 80.50 level. Still early, and I don't know what the heck happens to me, why my brain takes so long to turn on there. Tesla sideways right now. Okay, Tesla cut their, this is crazy stuff. Let me see here. And, what's nuts when usually these companies cut people on their team, their stock goes up. Let's talk. Musk disbands the Tesla EV charging team. It's kind of like, what? So Elon Musk's abrupt decision to lay off employees who ran Tesla's electric vehicle charging business has blindsided automakers. Oh my gosh, let me start this over, guys. I'm sorry. Elon Musk's abrupt decision to lay off employees who ran Tesla's electric vehicle charging business blindsided automakers gearing up to equip new EVs for customers to use the Tesla supercharger network. And I'm pretty sure in some ways that was like the standard. So that makes no sense. For now, General Motors, Ford, and other automakers which struck deals last year to give customers access to that network said they are not changing their plans. Tesla's decision to open its network to rival EV manufacturers, okay, so this is standardized charging, was hailed by U.S. President and opened the door for Tesla to get federal subsidies to expand the reach of its North American charging standard, its NACS. Musk's decision to dismiss the head of the business, Rebecca Tanucci, and most or all of the staff that operated and maintained the system, this is according to multiple postings online, left officials at automakers and Tesla suppliers uncertain about the future. Tesla did not respond for comment. Musk subsequently said on X that the carmaker still plans to expand the supercharger network, just at a slower pace for new locations and more focused on 100% uptime and expansion of existing locations. Co-CEO of Bullet EV Charging Solutions, the supplier to the network, said, as contractors for the supercharger network, my team woke up to a sharp kick this morning. Tesla has already been awarded money under the federal government's NEVI program. That's the National Electric Vehicle Infrastructure program. There's no way Musk would walk away from that effectively free money. It may be possible that Mr. Musk will reconstitute the EV charger team in a bigger way. GM and Ford, that's just someone musing on it, one of the contractors. GM and Ford, in separate statements, said they are not changing plans to equip their EVs with connectors that will allow drivers of Chevrolet, Cadillac, and other Ford brands to recharge at Tesla stations. You have nothing new to announce, is what GM said. That is really strange, and it's super strange he didn't say anything either. Because that was like the ticket, right? Like, you are creating like the way that all EVs charge, and that's just kind of crazy to me. It'd be interesting to see what he has to say, and I'm sure he'll say something on it. Or maybe he doesn't. He's a strange guy. Weird. Okay. Let's talk a little bit about CVS here. We have a lot of earnings this week. So, down about 18%. Pretty rough. CV posts big earnings miss, cuts profit outlook on higher medical costs. So CVS Health on Wednesday reported first quarter revenue and adjusted earnings that missed expectations and slashed its full year profit outlook. This was due to high medical costs. That's going on all throughout the industry, obviously. Shares of the company dropped 10% pre-market. We are down almost double that now. The drugstore chain expects 2024 adjusted earnings of at least $7 per share, down from the previous guidance of at least $8.30 per share. Analysts surveyed were expecting full year adjusted profit of $8.28. CVS also cut its unadjusted earnings guidance to at least $5.64 per share, down from $7.06 per share. The company said its new outlook assumes that higher medical costs in its insurance business during the first quarter will persist through the year. CVS CEO Karen Lynch said in a statement that the current environment does not diminish our opportunities. We have a pathway to address our near-term Medicare Advantage challenges. Insurers such as Humana and United Healthcare Group have seen medical costs spike as more Medicare Advantage patients return to hospitals for procedures they delayed during the pandemic. Medicare Advantage has long been a key source of growth and profits for the insurance industry, but investors have been more concerned about the runaway costs associated with these plans, which cover more than half the Medicare beneficiaries. CVS reported net income of $1.12 billion, or 88 cents per share for the first quarter, and that compares to the net income of $2.14 billion, or $1.65 a share. Excluding certain items such as amortization and tangible asset and capital losses, adjusted earnings per share were $1.31 for the quarter. CVS booked sales of $88.4 billion. I believe they're also bringing generic biologics. Let me check on that. I'm trying to remember if I was reading that about Walgreens. Yeah. Okay. Freaking weird. They're releasing biosims, which is neat. Yeah, okay. A store brand monoclonal antibodies. Okay, so this will be interesting to see for them. So they're just biosims, right? So biosimilars, biologic similars. Let's see here. Many private label products. Okay, blah, blah, blah. CVS Health launched a venture called Cordavis, which is a unit that will partner with drug manufacturers to commercialize biosims. Many such drugs have been coming off patent in recent years, representing a massive opportunity for middlemen such as CVS, stand between the drug makers and the patients. CVS says the biosim market in the U.S. is projected to grow from less than $10 billion to $100 billion by 2029. Whoa. The timing of the Cordavis announcement, of course, was designed. It came just as Humira, the highest grossing drug of all time, was set to start facing competition from biosims. Over its lifetime, the autoimmune drug for conditions like rheumatoid arthritis has generated more than $200 billion in sales. It's from AbbVie. For years, AbbVie used a wall of patents to keep cheaper copies of Humira from entering the market. Trying to read. Yeah, this allowed AbbVie to keep like 95% of the biologics market. This year, the strategy changed. January, CVS said that it would remove Humira from its major formularies on April 1st and replace it with biosims. And they're definitely going to make, I mean, and you know, it's like the same, you go to Publix and you buy like generic ibuprofen or CVS ibuprofen. Yeah, it's cheaper than whatever name brand they have out there. Folks, stay tuned. We'll be right back with Teddy Keckstad.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. It is 40 past the hour, and it is Wednesday. So that means we're going to take a look over here, TFNN.com. We're going to go to newsletters. Scroll down here, and this is the Tiger Forex report by Teddy Keksat. Now, this is released every Monday morning. It is a great overall look. Some of the Forex pairings, some commodities in there sometimes, bonds sometimes. We go into services as well. If you want to look how to trade, if you're new to trading and you want to learn some stuff, obviously candlesticking is massive. We have some webinars here from Teddy Keksat as well. These are all archived. Go back right here. Go to newsletters, Tiger Forex report. Now, come over here. This is 97 for the month, okay? You see we have different deals and all that, and we are joined by Teddy Keksat. Teddy, how are you doing?
I'm doing well, Jacob.
So, okay, well, we have a lot, right? So we have the Fed meeting today. I know I want to get your thought on oil, if you've been looking at that right now. Mm-hmm. Of course, you know, every fundamental kind of concept was saying that oil is going to go higher. We're having a momentary pullback. I'm not sure if that's going to be a long-term thing. Obviously, that is pretty important determining what the Fed's going to do going forward. Obviously, with lower oil, not so bad. So I'm curious to see what you're thinking about all of this right now.
Okay, well, that's right now. Oil obviously has been trending a little bit lower over the past couple of weeks, but overall, it's in a bull trend. You know, I mean, right now, I would say it's in a corrective phase. I would love to see oil $10, $15 lower. I find it really hard to believe that oil is going to continue to trend lower. I think it's in a correction to the downside right now. Mm-hmm. I really believe that if anything, it's gonna set a lower boundary for maybe a potential range that may be in for the next 3 to 6 months. If you're going to talk about oil stability, you're talking about a range trade between $75 and $90 a barrel. You know, we're not going to see the market get down to $70 a barrel or anything like that anytime soon. There's no reason why, between all the strife in the world to begin with. You know, I mean, you look at just the strike that was done on Iran. Like, if they wanted to, they could have hit the oil fields, right, and they didn't. You know, right, so right. I mean, like, if we do come to any more escalated conflicts, eventually oil will not be off the table. Somehow, some way, that infrastructure is going to get hit. You know,
absolutely.
So, and that's where I think that, you know, you have to at least keep that in mind, that the probability of something like that happening, it's always there, but it's increasing, and that's going to help, I think, raise the floor, if you will, on the trend for oil. I mean, do I like it going down? Yeah. here's the other thing is that if yields continue to stay firm or even get firmer, the cost to carry increases, which means all commodities go up in price. So that's another thing that helps to raise the floor. So unless you see a real big pullback in yields, which would justify helping to reduce the cost to carry over and maybe some possible stability in the Middle East, then perhaps we could see a little bit of a pullback. But once again, I think that we're probably in the middle of where the range is going to be, at least for the next 3 to 6 months, and we still have more potential to the upside than downside.
Totally. The next question I want to ask you, and maybe you can kind of elucidate on it a little bit, and then what you're seeing with it. This conversation about the Bank of Japan intervening, right? How much was it? It was 5 trillion yen. Can you give me a little bit of a cursory explanation of what that is, why it went on, and then kind of the implications regarding the, pairings with USD, the British pound, all of that?
Right. Yeah. This all started on Friday with the BOJ meeting, and they didn't raise interest rates, but raising is on the table. Okay, they did make a move. Now, here's the thing: is the volatility that's happened in the U.S. dollar yen, especially since Friday and even Monday. I mean, you're looking at it went parabolic as far as a rally on Friday, and then the volatility. I mean, anyone, whether you were long or short the yen going into Monday morning over the weekend, you can't tell me you didn't get stopped out. Unless you had no stop in the market and have some ridiculously deep account or fund, in which case you're taking ridiculous risk anyhow with that, right. I mean, and for anyone who doesn't trade currencies, if you were to look at the yen, US dollar yen, and see how it traded on Friday, which is the end of the week too, another thing, and then the way it opened on Sunday and just the range. I mean, you had Monday was an outside day, higher high and higher or lower low. Wow. Than it was on Friday. I mean, you're talking about a almost $6 range in a currency pair that, I mean, that's a very big deal. Yeah. Whether it goes one way or another, let alone that it chops around from top to bottom like a whipsaw, and I come from the S&Ps. That's a different type of animal that does that kind of thing. Currencies don't do that, and they don't do it for multiple days. You may get one. This is not like erroneous algo spikes on a daily basis where you take out a high or a low, or you have some weird choppy range trading going on. Right. When you're talking about this, the level of what you're talking about as far as the range, this is a big deal. You're talking the amount of money that's being swung around in that amount of period, in that currency pair, is ridiculous. Yeah. So I mean, there's no long or short that isn't getting just. If you're not on the right trend for in nimble and get out right away, you're gonna lose. There's no way you're not getting chopped up. There's just absolutely no way.
And I'm looking at this USD to yen. Mm-hmm. That is a wild move. Yeah.
Right. So, and as far as, to your question, it's the Bank of Japan, they are going to raise rates in the future. As far as this volatility, irrational exuberance is a term that was used before for market conditions. Mm-hmm. This is not irrational exuberance. This is. It's kind of psychotic is what it is. I mean, it's not a mechanical thing or a technical thing. Just like the way you look at these ranges, and like today is the first day that, and not that the yen can't move. The yen can be a very strong currency when it moves, but when you're talking about this just flipping around, chopping in this band that it is, I mean, you're looking like over a month's worth of volatility happened on Friday. And on Monday, even more, actually, there was probably 2 or 3 months of volatility that happened in a single day, I mean, and that's really what that is. And the Bank of Japan, the fact that we've gotten this high, it's gotten parabolic. I'd be very careful as far as, the long side, because our rates, unless we start going up and actually start raising rates, the market can push it. The relationship for the US dollar yen and the interest rates, we've already topped out. There's no more push for the dollar against the yen. Even if the dollar index goes up, there's just no more fundamental interest relationship there, So, and that's the part that really scares me, and especially if oil stays is stable, or what happens, I mean, today's Fed day, the Fed's not going to cut rates, and we know they're not going to do it probably until the fall, most likely, so, I mean, that's not going to be an issue. And if we take that off the table, be careful trading the US dollar yen. And I think it's a sell, actually.
Definitely. I hear what you're saying, too. And this essentially can go lower because USD is not being pushed up, right? I mean,
right.
Teddy, thank you so much for joining us. That was
welcome.
fantastic. Again, guys, that is Teddy Keksha, the Tiger Forex Report. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
All right, welcome back, folks. We have a short segment here taking a look at AMD, trading down 6.6% right now. So what happened? So they reported first quarter earnings and sales on Tuesday. They were slightly ahead of Wall Street expectations, provided an inline forecast for the current quarter. Shares dropped 7%. So earnings per share was 62 cents versus 61. Revenue $5.47 billion versus $5.46. AMD said it expects about $5.7 billion in sales in the current quarter, in line with Wall Street estimates. That would represent about 6% annual growth. The company reported net income of $123 million or 7 cents per share versus a net loss of $139 million during the first year earlier period. Revenue was up about 2%. AMD shares have risen 14% in 2024. So despite meeting the forecast estimates and signaling growth of AI chips, Tuesday's results were not enough to prevent the stock from sliding. Chipmaker said its closely watched data center segment grew 80% year over year to $2.3 billion thanks to the sale of its MI300 Series AI chips. Tons of people use this. It's going to be a second, though. AMD said it sold over 1 billion of the chips since it launched in the fourth quarter of 2023, which is pretty nuts. AMD expects 4 billion in 2024 AI chip sales, up from 3.5 billion forecasts in January. For comparison, NVIDIA reported 18.4 billion in its data center segment alone for January quarter, the most recent for which the financial results were available. Dang, that's like mogs it. Su told investors on Tuesday that the company was working on new AI chips and successors of the current generation. We're getting much closer to our top AI customers. They're actually giving us significant feedback on the roadmap. AMD also makes central processors that are often paired with advanced AI chips in servers. Told the analysts the company believed it had taken the market share in the server CPU segment, luckily from Intel. Su said that AMD sees signs of improving demand for its CPUs due to the AI server boom. AMD's weakest division was the gaming segment, which is down 48% year over year to 922 million. The company said it was due to lower chip sales for game consoles and PCs. There you go, folks. Thank you so much for joining me. Crazy market right now. We have Basil up next, so stay tuned for that. Take care, guys.